Welcome back everybody into another weekly recap. As you can see, this week we're going to watch it on the 1 hour. It doesn't really matter to go to dig down into the 5 minute or whatever. So as we're going to see is this week was coming from Monday 22nd of August, Tuesday 23rd, and then coming into Friday 26th of August. We're going to have a look at what happened as per economic calendar. So for the fundamental side of things, we had on Tuesday the manufacturing and services PMIs data coming out very, very bad. So showing a decrease in the numbers. So that's why, of course, on Monday we just had price action. On Tuesday, during New York, we had this upside move of around, from our demand area, around more than 180 pips due to the bad numbers of these reports, which of course are bad for the US dollar. It's not that they're good for the gold, but it's just that they're bad for the dollar. Wednesday, we had some durable goods, non-defense capital orders. So that basically was about orders, about supply, about what are the businesses ordering. And it came out better than expected in some of them. The durable good orders for July came out much worse than previous and than expected. So on the 24th, we had some mixed sentiment. As you can see, we had some move on the downside, of first bounce and rejection from these levels, and then just nothing happening, whipsawing. On Thursday, we had the GDP and the jobless claims and the PCE. So GDP was coming better than previous, better than expected. Even on the annual, on the index, was 9% compared to 8.9 and 0.3% better than previous. In the same confluence of the initial jobless claims that were much lower than expected. So that's why on the 25th we had this bearish move, and that will be followed into the Friday, already 100 pips on Thursday, and a bounce from this previous level. So this was the previous supply turning demand. But anyway, on Friday there was the main event because we had the PCE, and then we had Powell speaking from the Jackson Hole Symposium. So as you can see, PCE, which is the data of the inflation, and is the report that is most used by the Fed itself to consider how the inflation is doing. Especially the core year over year showed a decrease. So we showed coming from a previous 4.8, expecting 4.7, and we actually had a 4.6%. That meant that for the there was a whipsaw. So this was some moves happening, especially if you go on the 1 hour, you can't really see them. There was a whipsawing in between this demand and supply area, especially because that means that the interest rates are working, but people were waiting for this hourly candle because of Powell speaking, and Powell gave us that still inflation has to be fought, and that interest rates can be not aggressive, but still more aggressive than expected. So it's not like we are very happy about this inflation data, so we are going to slow down a lot the interest rate. Actually, he said that in September we can have a 75 base points interest rate hike. So as you can see, this was the price action, and we had this bouncing, etc, etc, etc. But let's go back and see our improvement opportunities of the week. So these are the previous one. I was understanding of technicals, how is market structure developing. The timing is still something okay, but this week I started thinking more live about the retracements. So especially on the 1 minute charts, trying to see in session to have a look at where is the retracement coming from. So for example, in this session there was not much, but okay, from here to there, let's wait for a retracement to price continue up or something like that I showed last week. So that's something that this week I was starting to do and do better. As you can see here, 50%, starting to see live where the price is reacting for possible continuation of the trend, and that's something that is a new thing, so it was good to be starting to see it live, to have the thought, okay, let me check this this factor, this indicator, this something. Think about where and when price is reacting, and if price is aggressively reacting at some random level, placing an horizontal line and go on the left, something you will find. That's something that we can have a look at because we have these two case studies. For example, for these candles, I didn't have any. I had the demand area here, I had a demand area here. I didn't know why the price action was so aggressively bouncing from here. So I thought, okay, let me place a horizontal line and go back in time. Let's see if there's anything that I missed. And I already talked about, as you can see, okay, so the reaction that I saw today are not random, are coming because this price level had some interest, some caused some reactions already in the past. So that's something that is really important because I'm not, and I will not be able to chart everything perfect up, and so that's a good thing, and that's something that I've been doing more often as well. For example, like here I didn't have anything, then I placed horizontal line, etc, etc. But was a big thing to learn about emotion, about the psychology part. I watched this video, Controlling Your Emotions Under Pressures, from Randy Howell, and the vulnerability of not being in control of uncertainty has to be addressed in order to change your frame of reference. So that's absolutely true. It's something that I found in myself, that I when I have to join, when I have to start trading, like my session is starting, I always have fear. I'm afraid, I'm anxious, and that's because of uncertainty. Because I'm not I'm approaching the uncertainty of the markets as a threat, and I'm not disciplined curiosity. So that's something that I will address with mindfulness and meditation, to in order to switch. The vulnerability of the market cannot be changed, is the nature of the market. What can I change is how my brain, how my frame of reference is towards that aspect, that factor, inherent factor of the market, so that, okay, I'm going to trade, I'm going to look at the markets, let's see what happens. I know that I have confidence to understand supply, demand. Okay, I'm not feeling threatened by this uncertainty, but I'm actually curious. Wow, today will be much different than yesterday. So let's be curious about it. And that's what I am. This is the most important thing that I learned this week, and it's absolutely my next step towards being a trader. This one, I don't remember what it is. Okay, this was of course from backtesting, snapping of price action, and okay, some fundamental catalyst. So at 2:30, 8:30 Eastern, we had this big news. I don't remember if it was CPI or I think it was NFP. And what happens usually, the price during NFP can go down, maybe react to this demand area, and that's the liquidity grab. Maybe the data is very bad for US dollar, so this liquidity grab for price to push back up in the right direction. But this time, for example, the NFP was really bad, was really good, sorry. So the bias is bearish on gold, and it went immediately. We did not grab any liquidity. So what I was thinking, because I managed to enter at this retest of the order block lows, is that, okay, maybe if the first minute candle does not go and grab any liquidity, then it will create a vacuum of liquidity. So it will immediately create a liquidity pool, in this case a supply, because due to the speed of this movement, there will be a lot of pending orders left here that have not been filled. So that will create a vacuum for a retest of the price action, price sensitivity areas, to then continue in the direction. If instead, I'm not saying that this happens every time, just this is my observation. If instead the price went and grabbed liquidity at a huge supply area and then continue down, then that would have been, I'm not saying that it would not have given you a retest, but it's just, okay, if the price goes straight, you can wait for the retest, because this aggressive move immediately at the candle open is leaving a lot of liquidity. So it is leaving a sort of imbalance, vacuum, that orders will be filled. So as you can see, that was the previous support to resistance, and that's something that I have to acknowledge. Let's read. Usually what can happen is someone move direction or liquidity up. Might be that in option 1, after the aggressive push, the liquidity pool is quickly created, formed from all the orders left unfilled. Therefore, a retest is quickly needed compared to the option 2, where all the orders gets filled in the initial liquidity grab. Of course, no, it's not necessarily that is happening every time, but it's something that I want to monitor, and something that I observed this week. So that's basically it for this week recap, and I hope you guys enjoyed, and I see you next time.